Yo, Bitcoin Bulletin fam, get ready for a wild ride because the crypto market is absolutely exploding with news. First up, we're diving deep into why Bitcoin is lagging behind the S&P 500 and what history tells us about its comeback potential. Is BTC about to catch up? Then, we've got a massive announcement from Morgan Stanley. They're planning to enable Bitcoin trading for their E*trade clients, a move that could redefine mainstream crypto access. We'll break down what this means for you. Next, we're looking at the ETF inflows, specifically how both gold and Bitcoin are attracting major investment in September. Is gold stealing Bitcoin's thunder, or is this a sign of bigger things to come for both assets? And finally, we'll see how option traders are anticipating more pain as Bitcoin and Ethereum ETFs are bleeding. What does this mean for short-term market movements? Stick around for all the details and don't forget to like, subscribe, and hit that notification bell. Bitcoin's shadow rally. Is the king of crypto poised for a comeback? While the S&P 500 and even gold are hitting new record highs, Bitcoin has been notably lagging, trading below $115,000. But don't count BTC out yet. This isn't the first time we've seen Bitcoin diverge from traditional markets like the S&P 500 during a bull cycle. History shows these periods of underperformance are often followed by significant catch-up rallies. In previous cycles, like between March and July of 2024, the S&P 500 surged while Bitcoin dipped, only for BTC to later outperform. A similar pattern unfolded later in 2024. Now, with the S&P 500 climbing steadily since May and Bitcoin consolidating, data suggests that Bitcoin is likely to follow suit and catch up, potentially to gold's current performance. The crypto community is buzzing, with many analysts pointing to historical patterns as a strong indicator of an impending Bitcoin surge. Will Bitcoin's historical resilience shine through once more? Get ready, because next we're revealing a seismic shift in institutional adoption as Morgan Stanley prepares to enter the crypto arena. Morgan Stanley's crypto conquest, E*trade clients to trade Bitcoin by 2026. Get ready for a game changer. Wall Street giant Morgan Stanley is set to bring spot Bitcoin and crypto trading directly to its E*trade clients in the first half of 2026. This monumental move, powered by a partnership with crypto infrastructure provider Zero Hash for liquidity, custody, and settlement, will allow retail investors to trade Bitcoin, Ethereum, and Solana directly from their brokerage accounts. This isn't just about trading. Morgan Stanley aims to create a seamless experience where traditional and digital assets coexist. Jed Finn, head of wealth management, called it a transformative moment, hinting at future plans for full wallet solutions and asset tokenization. This development, influenced by a shifting regulatory landscape, signals a massive step towards mainstream crypto adoption, with competitors like Charles Schwab exploring similar avenues. Bitcoin advocates see this as a huge validation, potentially injecting significant new capital into the market. This institutional embrace is huge, but what about the ETF market? Next, we break down the September surge in gold and Bitcoin ETF inflows and what it means for investors. Gold steals the spotlight. September ETF inflows show divergent fortunes for Bitcoin and gold. September has been a whirlwind for ETFs, with both gold and Bitcoin attracting significant investor capital. However, gold is currently outshining Bitcoin in terms of inflows, nearing its strongest yearly gain. Experts point to the growing demand for hard assets amid signals of potential Federal Reserve rate cuts as a key driver for gold's rally. While some, like Peter Schiff, view gold's outperformance as a warning sign for Bitcoin, analysts like Benjamin Cohen highlight Bitcoin's long-term outperformance, noting that even a tenfold rally for gold against BTC wouldn't erase Bitcoin's historical gains. This divergence comes after a major liquidation event in the crypto market following the Fed's rate cut, which caught many by surprise. While Bitcoin's momentum has cooled, gold's rally has accelerated, underscoring the demand for stability in volatile times. Despite the recent setbacks, the crypto market remains remarkably close to its all-time highs. With ETFs seeing big moves and liquidations shaking things up, how are option traders reacting? We'll dive into the latest on Bitcoin and Ethereum ETFs bleeding, as option traders brace for further turbulence. Bleeding ETFs and anticipated pain. Option traders brace for Bitcoin and Ethereum's next move. The landscape for Bitcoin and Ethereum ETFs is looking rough, with significant outflows reported as option traders are bracing for more market pain. This comes after a period of unexpected volatility, including a major long liquidation event that caught many crypto bulls off guard, particularly following the Federal Reserve's recent rate cut. While the broader market sentiment remains somewhat resilient, with crypto still near its all-time highs, the bleeding ETFs suggest a cautious outlook from a segment of investors. Option traders are clearly positioning themselves for potential downside, anticipating further turbulence in the short term. This could signal a period of consolidation or even further price adjustments before a potential recovery. That's a wrap on today's market tremors. But before you go, let's do a lightning-fast recap of all the major headlines. And that's a wrap on today's Bitcoin Bulletin. We saw Bitcoin lagging the S&P 500, but history suggests a catch-up is coming. Morgan Stanley is set to revolutionize crypto access for E*trade clients by 2026. September saw massive ETF inflows into both gold and Bitcoin, though gold is currently leading the pack. And option traders are bracing for more pain as Bitcoin and Ethereum ETFs experience outflows. Don't miss out on the next big moves in crypto. Make sure you're subscribed, hit that notification bell, smash that like button, and follow us on all social media platforms for real-time updates. We'll see you in the next one.